A very good afternoon to everyone tuning in to the weekly market review today on the 11th of August. I'd like to wish everyone a very happy National Day weekend after the long weekend holiday. And today we have Gerald with us as well. So how are you, Gerald, over the National Day holiday weekend?
Enjoyed myself with the National Day parade. But we are in the midst of a very busy earnings season with a lot of movements in the Singapore and US markets. And I think those are some of the key highlights that our viewers are keen to find out more today as well.
Yes, indeed. We had a very busy week last week. Of course, the week before, we saw the non-farm payroll data, which wasn't very optimistic and saw some trimming down of the numbers in the previous few months. But last week, the market keep roaring back with some of the earnings reports that were coming out. And of course, on the Singapore market, we also saw some of the banks reporting their earnings, which are the key driver of the STI. And we got the major news that there is a repricing of the Fed rate cuts, a projection going ahead. So I think a lot of these details, Gerald will cover it with us today. Correct, Gerald?
Yes, that's right. Okay, just as a disclaimer, today's sharing is for informational purposes only and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. And as a SIAS member, you can access various online resources as well as investor education programs. So we saw a bounce in the global markets in the past week at the back of greater expectations of Fed rate cuts. We see here S&P 500 close to its all-time high. Nasdaq reached record highs with a 3.9% gain in the past week. And closer to home, the STI also saw a 2.1% gain and back to above the 4,200 levels. So this is what we see in terms of the US one-year government bond yield. With the greater expectations of the Fed rate cuts, we see a very sharp fall in the US one-year government bond yield from above 4.1%, falling to about 3.85% before rebounding slightly to now about 3.94%. So overall, still fairly sharply down from where it was at the end of July. That came through after the weak employment data in the previous week and raising expectations around the Federal Reserve interest rate cuts. So this is what we see for the probability of Fed rate cuts. If you were joining our weekly market review last week, I shared that the likelihood of a September rate cut was at about 80%. Over the past week, it has now increased to about 90%. So investors seem quite confident that we will see a rate cut coming through in the upcoming meeting in September, potentially another one in October, and then potentially another one in December as well. Okay, in terms of the Singapore market top performers, we saw the STI having a 2% gain in the past week, and a number of names that actually had positive earnings surprises saw fairly sizable gains, including Yangtze Shipbuilding with a 13% gain, DBS with a 7% gain. And with the lower bond yields, we also saw some of the REITs having a bit of a bounce, including Mapletree Pan Asia Commercial Trust with a 4% gain. Okay, in terms of worst performers, we have got Singapore Airlines with a 4.3% loss after reporting the disappointment in the earnings, where I shared about last week, and Sembcorp Industries down by 12%. So the two names that I wanted to share today, one was in the top gainers, DBS, and Sembcorp Industries, which was the worst performer in the past week. So this is what we see for DBS's share price, reaching a new all-time high and crossing the $50 mark after reporting the first half earnings. So if I were to look at the net profit of DBS, 2.8 billion in the second quarter, that represents a 1% gain compared to the previous year. And across the board, we see that the total income went up, the profit before tax went up, defying expectations that the earnings will come under pressure with the decline in the net interest margins. So this is what we see for the net interest margin. I think the concern was that the net interest income will come down very sharply because of the fall in the net interest margin. Overall, when we see the interest rates coming down, that will usually put pressure on the net interest margin of the Singapore banks. So we see here in terms of the group net interest margin, it's come down from 2.14% in the second quarter of 2024 to 2.05% in the second quarter of 2025. But because the bank has been able to still grow its loan book, which is why even with the fall in the net interest margin, the overall net interest income of the bank still managed to see some growth compared to the previous year. But more importantly, we saw very strong growth in the fee income of DBS. This is the fee income, and we see that it went up to about 1.4 billion in the second quarter of 2025 from 1.26 billion in the second quarter of 2024. A big part of that is driven by the growth in the wealth management fee income, which actually saw an increase of 25% year on year compared to last year. So now at 649 million compared to 518 million in the second quarter of 2024. So that led to an overall growth in the fee income of DBS by 10% year on year. Okay, so overall, we see that the non-interest income reported growth. Part of it was driven by the growth in the fee income, but overall, we also saw some of the increase in the market trading and other income, which led to increase in the non-interest income of DBS and helping to offset the slight pressure on the net interest margin. For DBS, we also saw that the company announced an interim dividend of 60 cents. That on top of that, there's the 15 cents capital return dividend. So total dividend of 75 cents in the second quarter, bringing the first half dividend to $1.50. Okay, in terms of the outlook, they expect that the group net interest income will be slightly above the 2024 levels, despite the pressure on the interest rates. And with that, what we see is that on top of the growth in the net interest income, the commercial book non-interest income is expected to also grow by mid to high single digits. So at this point in time, they're expecting the net profit to be below the 2024 levels, but that is mainly due to the global minimum tax of 15% that will actually lead to a slight increase in the tax levels. At this point in time, DBS is trading at about 2.2 times price to book, which is above the historical average price to book levels. But that is mainly due to expectations that the company is able to maintain its very high return on equity. If I were to look at the stock from a dividend yield perspective, currently, investors are expecting a dividend yield of about 6% this year. That still remains above the historical average dividend yield of 5.3%. Next, I'll come to Sembcorp Industries, which saw a sharp decline in the share price after the first half earnings were reported. So coming down to about $6.70. But even with that, it still had a decent year-to-date gain of about 20%. So what we see here is that the net profit of STI was down about 1% year on year. The underlying net profit was about flat at about 491 million in the first half of 2025. I think that is what the disappointment is, because if I look at the past few years, Sembcorp Industries has reported fairly strong earnings growth, averaging about 36% per year between 2020 and 2024. So the decline in the reported net profit and the stable underlying net profit was probably something that investors were disappointed with. Okay, if I were to look at the breakdown of the earnings across the various divisions, the gas and related services saw a profit decline of 3%. So that is probably where the disappointment was. Renewables still saw strong growth of 27% year on year. And if you're to look at then the underlying net profit, that was at 491 million, representing just a slight increase compared to the previous year. So if I were to look at what were the drivers of this weakness in net profit, the company actually gave a good breakdown here. We see that that is really driven by a few things. Number one, the gas-related services saw a decline in the profit. Renewables did see growth in the profit, but probably not as much as what some investors were expecting. And with some of the currency headwinds, that actually led to the pressure on the net profit. So first and foremost, we look at the gas and related businesses. We see here that the power prices in Singapore continue to see weakness, down by 39% year on year in the first half of this year. And that actually led to probably weakness in the profit for the Singapore power business. Next, we look at the renewables business, and while the capacity growth in renewables continue to be strong, in China, that was actually impacted by some of the limitations that it had in terms of selling the power to the grid, as well as the decline in the power prices in China. So overall, we see here that the demand growth has actually been weaker than the supply growth for some of the renewables capacity in China. And that actually led to the weakness in the renewables business in the Chinese market. Okay, on top of that, what we see generally is that the Sing dollar has strengthened against some of the regional currencies, given that Sembcorp Industries has got operations in China, in India, and some of the other markets like Vietnam as well. The company estimates that this had a 23 million currency translation impact on the first half 2025 earnings, with the strength in the Singapore dollar. So in terms of the outlook for Sembcorp Industries, overall, they still expect a resilient performance for 2025. For the gas and related services segment, they expect that the performance will be resilient despite the lower spreads for contracts that were renewed since the second half of 2024. At the same time, in UK, they expect some pressure because of the reduction in customer demand with the closure of one facility at its business where the power plant is actually located at Wilton in the UK. In the renewables segment, they expect that the earnings will be lower in the second half of this year due to seasonality, as well as continued pressure within its Chinese renewables business. So overall, they expect that they'll be able to maintain a sustainable dividend payout in 2025, which is in line with the underlying earnings as well as its dividend policy. So in the long term, the company still expects to be on track to meeting the growth in the renewables capacity. In the first half of 2025, they continue to grow their renewables capacity, which is now at 18.9 gigawatts from 16.8 gigawatts at the end of 2024. Overall, they expect that the gross renewables capacity will grow to 25 gigawatts by 2028. So at this point in time, Sembcorp Industries is trading at a price to earnings of about 10 times. That is still slightly above the historical average, and a lot would then depend on whether the company is able to restart on the earnings growth once again. Okay, looking ahead, we have quite a number of companies still reporting this week, including Wilmar, including City Development, ST Engineering, as well as CapitaLand Investment. So those are earnings that we'll keep a lookout for. And then at the same time, we also have the US Consumer Price Index data that's coming out tomorrow on the 12th of August. So with that, I'll hand over to Sunny, who will share the technical analysis.
Okay, thanks, Gerald, for that coverage on some of the results from the Singapore earnings season, especially on the Singapore Bank DBS. So on that note, let me start with the STI index first. So the STI index performed very well last week, as shared by Gerald earlier. We are up more than 2% for the last week period. This Monday morning, we are seeing STI holding its ground nearly flat, down just 2.5 points. So the all-time high still stands at 4,274 points, which was what we saw at the end of July. And we are not too far off. We are just about 35 points away from the high level, which is very much in a striking distance. And it's the earnings seasons continue to perform well. I believe STI will definitely sort of challenge the previous high that we saw in 24th July, the year-to-date high. Okay. So the near-term target for the STI index would definitely be the upper bound of that Bollinger Band, now at 4,291 points. And of course, if you go slightly higher, we would hit the 4,300 handle for the STI index. So that is the level to watch. But given that the index has risen so much already, and let me check the year-to-date, it's out about 11.76%, close to 12%. So that means that pushing it up higher would have to depend on a lot of other catalysts, especially the interest rate environment. Okay, so not only did the bank perform well, some of the REITs counter also performed well. That helped the STI to sort of maintain at an elevated level. So last Friday, more or less, we saw that we have a bounce on the 20 days moving average, and then we have been trending above that line. We are going into a very narrow range. As you can see, that the Bollinger Band is narrowing, is a band between the upper bound and the lower bound. So that means that we will likely see more or less a sideways action going into the next few weeks or the end of August. So the support level would be at the lower bound of the Bollinger Band at 4,125 points. This lower bound Bollinger Band is likely going to converge up higher, and you could see that it could sort of find confluence with the low that we saw last Friday at around the 4,150 points level. That would become a very strong support for the STI index. And the next level, we are looking at the 4,060 points level. Okay, so let me just indicate that region for you. So we are expecting to see the Straits Times Index going into this kind of range-bound movement in the next couple of weeks until the end of August at least. Okay, so this is the range that we are looking at. The MACD reading is looking negative, slightly negative, or even just looking at the trajectory of the MACD line and the signal line is likely going to move sideways. So this is what this also ties in with the narration that STI is likely going to move in a sideways action in the next couple of weeks. The RSI is at the 65-point reading. It came down from a high of about 91 points on 24th of July. That was the previous high. So that means that STI is still hovering above the 50-point neutral mark. There's still some positive momentum, but we are close to the 70-point overbought level again. That could put some pressure on the STI. That also ties in with the narrative that STI is likely going to see some sideways action with the support at low bound Bollinger Band 4,125 points, with the 4,003 as the near-term target for the STI index. Okay, next, let us move to the US indices. So the US index also rallied last week, and some of the major indices are pushing close to the all-time high as well. The Dow Jones Index also got a boost last week as well. The major news was on the US side, Apple, Nvidia, and AMD, the tech companies, managed to get some kind of tax exemption from the US administration. So that means they will not be impacted by the tariff as much as previously expected. Okay. So for the Dow Jones Index, you can see that we are hovering around the 44,175 points level. The key support coming in at the lower bound of Bollinger Band, finding confluence with the 50 days moving average is at about 43,680 or 43,650 points level. That will be a key support. You can also reference the low on 1st of August, which was the week that the non-farm payroll data was coming out very bad. And after that, we saw a rebound. So that level around the 43,325 points, that was the low, will also provide some support for the Dow Jones Index as well. Okay. So resistance level, upper bound of Bollinger Band at 45,037 points, all-time high at 45,016 points. So definitely 45,000 will be the key level to watch. So we are about 800 points away from that key level. But looking at the indicators is not so positive because MACD is going downwards with a negative reading. That means we continue to see further downside from the Dow Jones Index, and the RSI is pretty neutral, sitting just about 1 point above the 50-point neutral mark. So it's not looking very positive on the Dow Jones Index. So likely a sideways movement is going to be true as well, with the support coming in the first level at the 43,650 points level, with the 200 days were providing further support at 42,900. So 43,000 will give us a very strong support on the Dow Jones Index, with the 45,000 as the key resistance level in the near term. Next, let's move to the S&P 500, which benefited more from some of the tech stocks rebound. So you can see that S&P 500 closing at 6,389 points is on the verge of touching the all-time high as well, now at 6,427 points, with the upper bound Bollinger Band near that high level at 6,418 points. Okay, so support level, we are looking at the low bound of the Bollinger Band and the 50 days moving average as well. That is a 6,223 points level, or the 6,177 points level. That will be the 6,200 handle that we are looking at. So the range that we are looking for the S&P 500 between 6,002 to 6,005, that is the range that we're looking at for the next few weeks movement. Of course, you can reference the low on 1st of August, that is around the 6,212 points as well, tying in with the levels that we have mentioned earlier. So MACD is slightly negative. RSI is about 62 points. So it's a bit of a contradicting, because MACD negative, RSI still shows some positive momentum pushing up. So that means that the upward pushing momentum will not be as strong, and a lot depend on the CPI data that is coming out this week. The market expectation is we don't want a hotter than expected inflation report, because that will complicate the Fed decision of making a rate cut in September. If we get a cooler inflation report, that will help support the case that the Fed should cut interest rate in September, and that will be the next catalyst to form the new all-time high that we saw in the US indices. Okay, lastly, let us move to the Nasdaq Composite Index, which managed to set a new all-time high and a new all-time close. So this the Nasdaq is the leading index among the 3 US indices. So resistance level, there would be no sort of resistance level upward except for the next handle at 22,000. So we are about 550 points away from that level at 22,000, which will be the new all-time high that we are targeting. But support level, we are looking at low bound of Bollinger Band at 20,581 points, with the 50 days moving average at 220,310 points. Okay. MACD is sort of a neutral or slightly negative. You can see that it's negative reading, but we can see that the MACD line is sort of a converging upwards towards the signal line. That could mean that there could be still another push towards the 22,000 level. The RSI is rebounded from the low on 1st August of 50-point reading to the 67-point reading. So the momentum is healthy, this rebound, and hence we could push above the 70-point mark. I mean, we still have some headroom to go up higher. Okay, so these are the important levels I want to cover this week. Any key information that we need to sort of look out for ahead, Gerald?
Yeah, so I think we saw quite a bit of movements in the Singapore stocks at the back of the earnings. Whether they surprised positively or disappointed, we saw fairly big movements at the back of it. So we'll continue to keep a lookout for some of the companies that are reporting this week. At the same time, like you mentioned, the consumer price index data will give us some confirmation as to whether the Fed will cut interest rates in September this year.
Yes, so still a lot to look out for. So in the meantime, do stay tuned to our in-market review. And that's all the time that we have for today. So we look forward to see you again next week on the next week in-market review. Bye.
Thank you.